Welcome to Market Matters. I'm Nadia Hassan together with Charlotte Chong. It is the first day of the last month of 2015. The whole year seems to have just sped by. Do you feel that you've accomplished something this year?
No, not really this year.
Oh, well.
But wow, the biggest accomplishment is to be here with you.
Exactly.
Hosting a show.
Exactly. It's a new show for this year. But yeah, it's been a very, very interesting, I think, couple of months. It's hard to believe that it's all almost over. We are 24 days away from Christmas, 30 days away from a brand new year.
Now the big question is, will we see a Santa Claus rally just before the year end?
Yeah, because usually that happens in December, and for this year, I'm reminded of this song where you better watch out, you better not cry, you better not pout. And I'm telling you why, because Janet Yellen might come with her rake height. And but before we go on to what might actually cause that, KLCI had an up day today out of difference from yesterday. 10.21 points or 0.61, very, very little in change. 1,682.37 is what we closed the day at.
Now, top gainers were BAT, Lafarge Malaysia, RHB Capital, which we are going to talk about later. And top losers were Genting Plantations, Farmniaga and KLK. Now, when you look at volume was at about 2.31 billion, with value worth 2.34 billion ringgit. Ringgit has strengthened slightly against US dollar today, quoted at 4.24 when I last checked. Well, the reason why local currency has snapped a 3-day losing streak is because on the prospect of ECB might actually, roll out more measures for stimulus in the market.
We'll actually know that in a couple of hours, either today or tomorrow, when
President Mario Draghi.
Super Mario actually takes to the stage and see what he says. But talking about currency, which is big congratulations and bouquet of flowers to China, where renminbi or the yuan has actually been accepted by MF to be one of its special reserve currencies. Talk about an entry into the big boys club. It's a recognition I think they've all been talking about for quite a while. What does Tan Sri Zati say?
Well, Tan Sri Zati actually said that there will be more opportunity into renminbi investment, and I'm very happy for China yuan, or we call it renminbi, because it actually secures China's standing as a global economic power.
Shanghai Composite Index also liked it, up 0.32%. Hang Seng also a nice little up, about 1.55%. On global notes, talking about the UK banks, for example, it's an interesting thing for them. They all passed their stress test. I think the spectre of the financial crisis still haunts. And just before we move on to Hotstocks, talking about hot weather, Paris climate talks is currently ongoing. I know some people don't care so much about climate change. I think it's a big thing. I think it's something we should watch out. But talking about hot and Hotstocks, Felda Global Ventures Bhd, talking about people who preserve the environment. Palm oil companies aren't always
FGV actually went up 4.52% today at 1.85 ringgit. Shares jumped 4.52%, as high as 4.52%, after Felda boarding Eagle High deal worth about 680 million US dollars. Now, we have been not wanting to talk about this company.
You have actually we all have not been wanting to talk about this deal, mostly because I think there was far too many things still up in the air. So the thing is, I'm getting a sense of deja vu when you were away where Tenaga did not get 1MDB's or Edra Global's power assets. It went to China and the share price just jumped. I'm getting the same feeling here. When your share price jumped after you bought the deal, must there something wrong with your deal to begin with? And this deal has driven more criticisms than anything else. We mentioned it yesterday, actually.
So FGV CEO Mohammed Emil Mawani Abdullahi said that bearish crude palm oil, two reasons, bearish crude palm oil and weakening ringgit forced them to renegotiate the deal. And they say they are still actually talking to the company in Indonesia, Raja Wali, to probably strike up a new deal. But CIMB Research actually says something else. They say they will actually take the deal entirely off the table.
Yeah, I think that's what people are actually indicating, that you can tell me that you're not renegotiating all you want. I think it's still not there. I mean, at this current pricing, at the current levels, the massive price tag that you were pinning on it just will not swallow. And they say they may start renegotiations at the first quarter of next year. I think a lot of things have to happen for that to take place. First of all, the ringgit needs to strengthen.
And CPO price needs to strengthen as well.
Exactly.
So what happened was, since the first deal, the ringgit has fallen about 12%. CPO prices has fallen about 6.9%. And that's why they say they need to look at the terms again and strike a new deal in first quarter of next year.
To simplify it, basically it's just not worth it anymore. It's just not worth it anymore. But anyway, just to bring in all three reasons why it's not worth it anymore, we saw Felda Global Ventures actually jump up about 4.52% to a ringgit 85. The reason why is because they aborted their Felda, they don't actually use those strong words. They aborted the Eagle High deal worth 2.4 billion. They said it just wasn't working at these levels. But the fact is, the share price went up, which means people are glad that this deal is no longer on the table. And moving on to our stocks with momentum, and if you've been following this show or follow, what I've been talking about usually, I love food and I love healthcare. I mean, I think both are highly
defensive.
Exactly. So, and in defensive in certain ways, where I think that even if you're dying, you still need a chocolate bar, but you still need a place to sort of redeem yourself. KPG Healthcare Bhd up about 1.17%. Positive momentum, the only stock pack with positive momentum.
So this company, this group is actually the largest healthcare group in Malaysia, operates about 25 hospitals in Malaysia, Indonesia, Thailand and Bangladesh. Share price have up 12% year to date actually. So what happened last week was they announced third quarter results, which was quite impressive. Profit up 31% on increase in revenue and contribution in their hospitals. Revenue from aged care facility segment, which is not very common in Malaysia or in Asia.
Is it like old folks home, right? Or essentially it's a nice word for old folks home.
So it has actually increased 7% to 32.9 million ringgit.
Well, I think the thing for them is that they're definitely looking for more contributions to, to their new, from their new hospitals. And I looked at all of them. They are like adding quite a 1.5 billion to build 10 hospitals in KL.
In 5 years.
2 hospitals
each
per year in 5 years. And here's, my issue is, I'm slightly on the socialistic side on the fact that I think healthcare should be free. I don't know. I think private hospitals, there is a market for them, but I think the other side, the people who can't afford them should also.
I think a lot of mechanisms have to be put in place before we can move towards what's happening in the UK and the US, where they
not the US. The US has no free healthcare. The US,
UK, they could actually get healthcare for free.
Yeah, UK they can. US is a diseased gorilla that tries to kill you every time you give it free healthcare.
So this company actually, they are positive on future contribution from new hospitals, but they say new greenfield hospitals have an average gestation period between 3 to 5 years. That's why they say the result will moderate the group result and performance.
Have you seen their ads?
Yes, I have.
You've seen their ads,
it's
right?
Everywhere.
It's everywhere. They must be paying a lot because they seem to get all these local celebrities to come and promote. I don't know if I trust that, quite honestly. But I suppose as they are trying to get an edge in IHH in terms of the A&P. But IHH, I think, is there. I mean, Pantai is a good enough brand. I still think competition is going to be tough for them because there will be other options. Exactly, margins is going to be tough. But just to sort of bring it all home, we're looking at KPG Healthcare pegged as positive momentum by the Edge Research. The company has seen a 31% jump in its earnings for the year. Very, very impressive. They're planning to open a whole bunch of new hospitals going up next year, but competition still, of course, remains an issue.